Hello and welcome to Market Domination. I'm Josh Lipton, live from our New York headquarters. It's about 30 minutes to go until the closing bell, and stocks are mixed here. Down, the S&P 500 pulling back from recent records. Our very own Jared Blickery is over at the Wi-Fi Interactive with the latest headlines. Jared, what are you seeing in the markets?
Seeing a mixed market right now. Let's take a look at the Dow first. As you said, coming off a record high, but not today. Probably not going to happen in the next 29 minutes. It is down 439 points, or just shy of 1%. And I will show you the intraday price action. And we are plumbing to new lows for the day as we speak. You can see we started out just barely in the green there. NASDAQ going the opposite way, spent almost the entire day in the green. And we are off of those highs right now, but we are seeing a little bit of strength in software. We're going to take a look at that in a second. And then the S&P 500, that has fallen into the red over the last 30 minutes. And you can see it's down about 0.25%. Also like to show you what's happening in small caps. Russell 2000 off about 0.3% as well. And before I get to the sector action, let's check out what bonds are doing. We got the 10-year T-note yield down 4 basis points to 4.14%. Haven't seen a move that big in a few weeks. 30-year down 5 basis points to 4.82%. And the US dollar index just barely up. And as I promised, checking out the sectors today, only healthcare and consumer discretionary in the green. Healthcare, XLV, that is up 0.8%, also notching its first record intraday high in a couple months, I believe. So definitely the first one of the year. Utilities are worst off today. That's down about 2.7%, followed by industrials, materials, financials, energy, real estate. All of everything in the bottom row down about 1% or more. And if we take a look at the NASDAQ 100, we see some green in the mega caps. In fact, a lot more green than red. And that is a reversal from what we've seen this year, the preceding 3 days. That's all that we've had so far. Alphabet up over 2%, Microsoft up over 1%, Tesla in the green again. Meta down though 1.8%, and Apple down about 0.5%. I do want to dig into tech. I'll go to semiconductors first, and we have seen them soar over the last few days, but for the most part, not today. Intel, though, is up 5%, but you're seeing a lot more red than green here. But software looking pretty bullish here, and we see PanW, that's Palo Alto, up almost 5%, CrowdStrike above 5%. Datadog, Atlassian, Zscaler, all of those up more than 3%. And let's check out this. I mentioned before that the Dow was coming off a record. So are the transports, but today you're seeing a reversal in a lot of the things that have been doing well lately. So Caterpillar's down 4%, Goldman Sachs coming off a record, that's down 2%. And Chevron, that had a nice pop earlier in the year, that is down about 1% right there. And here are the transports. They were also coming off of a record. Uber is still up. UPS just barely green. So is Southwest and a couple of the airlines. But for the most part, more red than green. So kind of a mixed bag here. Not going to make too much of it, but we'll see what happens into the close, Josh.
All right. Thank you, Jared. Appreciate it. Well, markets are coming off a powerful multi-year run, but the big question for investors now is whether 2026 brings more upside or a much-needed reset. For more, we're bringing in now Mark Newton, Managing Director and Global Head of Technical Strategy at Fundstrat Global Advisors. Mark, my friend, always great to see you. So what to expect in 2026? Choppy, you say, Mark. Possible 15 to 20% drawdown before we do finish the year higher. Now that's interesting. Maybe start there. If I'm a viewer, Mark, or I'm listening to that, I'm wondering what's the signal, Mark, or signals that would suggest that kind of drawdown, that kind of decline is on the way? And what would be the signal, Mark, that would tell me it's complete?
Thanks, Josh, and Happy New Year to you and all. Look, I think it's important to differentiate between the short-term prognosis and really what I see for the course of the year. I am positive for this year. I have an S&P target of 7,300, but I do expect it's going to be a year of consolidation and choppiness. And I think a lot of that is going to stem from technology starting to show some evidence of consolidation after really a phenomenal 3-year run. We have seen a lot of these tech stocks get quite overbought in the near term. Many might realize that stocks like NVIDIA, of course, are really a shell of what they were in recent years. We've gone almost sideways since the month of July, and many, might see obviously other parts of software like Microsoft. Software has been under pressure almost for 6 months. It's been really a difficult area within technology. So, I think when the Palantirs and the Microsofts and the NVIDIAs of the world start to show some evidence of pulling back, that would be a sign that the stock market likely would begin some consolidation. Now, I do think that is premature for now. I honestly am quite bullish with what's been happening over the first few days of this year. We're seeing breakouts, not only the Dow Jones Transportation Index average over the highest levels we've seen from 2021 and 2024 to new all-time highs. That's happened in the Dow Jones Industrial Average. It's happened in the equal-weighted S&P, mid-caps. S&P, of course, notched its own all-time high the other day. So right now we've seen, after about 6 months of breadth really waning a bit, that's starting to show evidence of coming back. We're seeing evidence of, industrials starting to climb again, financials, discretionary. Those are all very good signs. Sentiment, however, is starting to recognize that markets are, pushing higher to begin the year, and that's also starting to climb. So that's going to be the one thing that investors really want to pay close attention to, is when sentiment starts to show more evidence of being frothy. For right now, the economy arguably is still in pretty good shape. We saw the labor market data today, quits rate going up, dropouts, layoff rates going down. Tough to say that that's a sign of a deteriorating labor market. Earnings have been in great shape, and breadth now is starting to climb. So in the near term, and by near, I say probably in the next 6 to 8 weeks, I actually expect a pretty decent stock market rally. Thereafter, I think it's going to start likely in the latter part of February, early March, where we're going to start to see some pressure in stocks that likely lasts down to May, and then a bounce, and then we probably have some third quarter weakness. Thereafter, I think stocks will be fine. So I'm not calling for the end of any sort of bull market per se. I think we're in a multi-year secular uptrend in AI. But I do think we need to consolidate what we've seen in recent years. And that process, honestly, has already started to happen with many of the often watched tech stocks that you and I talk about every day.
You mentioned, Mark, Microsoft and NVIDIA there. You also do call out Apple and Tesla. What do the charts indicate with those names, Mark?
Well, both of them have been weakening of late, which is unusual because S&P hit new all-time highs, but yet, Apple and Tesla have both been pulling back in recent weeks. I actually like owning both of these. Many investors might realize that the QQQ has not pushed back to new all-time highs, but is right now within a symmetrical triangle formation, as we technicians like to say. That is on the verge of a decent breakout, in my view. It should be resolved by a move back to the upside, which likely carries technology higher even still. So I think that tech is going to sort of reassert its leadership probably for about a month or two max. And we see a decent push up in technology, meaning Apple and Tesla bottom, start to turn higher to sort of join this move that we're seeing obviously in the data storage stocks. The Seagates and the Western Digital of the world, Micron, have been incredible. But, you have to be a little bit more selective in tech. Palantir has gone nowhere in about 6 months. And so you have to really understand what you're owning and what part of the cycle that we're in.
You also sound like you're constructive here on commodities, Mark, oil and gold, but expect some near-term pullbacks there?
The precious metals I like a lot. I don't think they're going to pull back necessarily. My concern is really about oil. And I think that between now and the middle part of February, we are going to get sort of a final move down towards new lows. And that should mark a pretty decent buying opportunity. I am expecting energy can outperform this year. It's been a huge supply imbalance in recent months and really a lack of global demand. That should start to change. I do not believe in the saying of peak oil. I heard from the IEA, that likely they've completely reversed their stance. We know that, fossil fuel demand is necessary for AI. So I think that oil is going to be just fine. Actually, I think for value pickers, this year, it's going to be an interesting area to look to really buy dips, I think, in the next couple of months, because energy should be in the process of slowly but surely bottoming out. Precious metals, on the other hand, have gotten very, very extended, but still look phenomenal technically. I think the majority of their move this year will be made in the first 2 quarters of this year. I see gold getting to 5,000. Silver could get to 90. But both are very extended and certainly in the latter stages of their own intermediate term cycles. As interest rates start to gradually pick up, which I think starts in the spring, that likely is going to cause the precious metals to finally start to pull back.
Mark, great to see you as always. Thank you, sir.
Thanks, Josh.
Now time for some of today's trending tickers, and Yahoo Finance's Brooke DePalma joining me here to look at Cal-Maine Foods, GameStop, and Crocs. Let's start with Cal-Maine, the nation's largest egg producer, reporting net sales for the second quarter that did fall short of expectations, and that stock is down about 25% now over the past 12 months, Brooke.
Yeah, and definitely falling as we make our way towards the close, down about 1.5% during today's trading session as we near the end. And what we really heard from the company was, yes, that revenue miss. Revenue came in at $769.5 million. There was expectations for about $790 million. So really falling short here, and that's what seems to be weighing on investors' minds. Now, keep in mind, what we did hear from the company was that these falling egg prices really led to that revenue decline. And shell egg sales, so just ultimately normal eggs, they represent about 84% of overall revenue. And that particular segment within the sales decreased 28% due to lower prices and also lower volumes. Now, one segment of the business that didn't fall as much was their specialty egg business. Think organic, cage-free, premium, pasteurized eggs. That was down only about 0.4% when it came to sales, and that was because they maintained strong prices and volumes. And this was a company that really saw increased momentum behind the stock performance because of that increase in price of eggs. And now, as egg prices have fallen off, we've also seen a fall off of Cal-Maine Foods stock as well.
All right, turn to GameStop as well. That company is sharing its long-term performance award for CEO Ryan Cohen. So Bloomberg has a good write-up here. Basically, GameStop says its board has granted Mr. Cohen, who was chairman and CEO, a performance-based stock option award. Only vests if the company achieves significant market cap and profitability goals.
Yeah, so this is particularly within that release. They did say that the market capitalization would have to grow to $100 billion, and the company would need to achieve $10 billion in cumulative performance EBITDA. And keep in mind, right now their market cap is at 9.26 billion as of today, according to Yahoo Finance data. And so really, this is a high hope, high expectations for Ryan Cohen, but this is certainly not the first time that we've heard companies' performance tied to these very significant salary packages or pay packages for executives. We know that Tesla shareholders did approve that $1 trillion pay package for Elon Musk that's tied to the company's performance as well. Also, Starbucks tied some of the company's pay packages to performance earlier last year in June of 2025. And so this is not the first time, but that is definitely a significant performance that Ryan Cohen needs to pull off here.
All right, and finally, let's kick it over to Crocs. That stock got hit with a downgrade over at Baird. Baird downgrade that went to neutral, so they moved to the sidelines. They note recent stock outperformance, concerns with the 2026 outlook. They do maintain the target at 100, it looks like.
Yeah, so right now the stock's sitting around $85. The stock is down more than 20% compared to last year, currently down 4% as we make our way towards the close. And this is a company that I covered really closely, especially a few years ago coming out of the pandemic. In April of 2024, I actually did this story about comfort over appearance and how Crocs is really playing into that as Americans got their way out of COVID. And now what we've seen is weakness in sales for Crocs. It's just not where it was a few years ago. So analysts here really upping the game for product innovation in order to get consumers back to buying Crocs. They did just announce a partnership with Coca-Cola. Take a look at that. But over the holidays, Crocs did see double-digit year-over-year declines in sales. And so really, it's all eyes on if this company can really move past this hump that they're seeing with product innovation.
All right, thank you, Brooke. Appreciate it. Well, the real estate market is potentially facing a major shakeup. Just last month, President Donald Trump said he was planning to unveil some of the most aggressive housing reform plans in American history. Fast forward to the new year, and the president is finally sharing more insight into his plans to address housing affordability. Trump saying in a social media post that he is taking steps to ban large institutional investors from buying more single-family homes, and will be calling on Congress to codify it. Shares of Blackstone sliding on this potential ban for institutional investors. The asset management giant, which manages more than $1 trillion, has spent the last few years building one of the largest rental housing portfolios in the country. This trend in housing reached a new high last year when a record 30% of single-family home purchases in the first half of 2025 were made by investors. That's according to analytics firm Cotality. Trump is expected to discuss the topic further, along with other housing and affordability-related proposals, at his upcoming speech at the Davos conference near the end of this month. Well, coming up, Intel shares spiking today. We're going to bring you the news behind that move next on Market Domination. Intel shares getting a boost after the company unveils its AI developments at CES, the biggest tech event of the year. Here with a closer look, got Yahoo Finance's Laura Bratton. And Laura, the stock's popping 6% right now. What's going on here?
Yeah, so Intel at CES in Las Vegas unveiled its Core Ultra Series 3 chips, which is a really big deal. They're the first chips made on 18A for Intel, which is its latest manufacturing process. And executives said that the chips, which are codenamed Panther Lake, are in production and ramping and available for order this week, which is a really big deal.
And so that explains. So that's a nice 6% move, which, by the way, what a monster move over the past 12 months. The view of these latest PC chips, why is that so important, Laura?
Yeah, so Intel's kind of been in this negative feedback loop where it's really struggled to introduce new manufacturing technologies. Then its chips have sort of lost their edge to AMD and ARM, and then because of that, it doesn't have enough volumes to fill its factories or fabs. And that's kind of created a lot of problems because the manufacturing business is super costly. So under Gelsinger, they had this big plan to, move ahead on manufacturing, introduce all these technologies. And there were a lot of delays. Falcon Shores was supposed to come out this year, and they canceled that. It was supposed to be a data center AI chip. So introducing 18A was a really big deal because it shows that they finally made good on their promise to deliver this really big technological feat, this really big step up in manufacturing. And they actually delivered a product on that manufacturing process. So, maybe they haven't been able to get an NVIDIA or a Broadcom and a big external customer to make chips on this manufacturing process, but at least they've been able to deliver their own internal product, which, appears successful. So far, we'll see what the yield is on this product. And then, maybe that will help them draw an external customer for their upcoming processes.
What's next for Intel? What's on the radar there?
Yeah, so I think people are really waiting to see what the yields are on these chips or on this on 18A, and how well Panther Lake chips perform. And then next is 18AP and 14A, and we'll see if they can get a big external customer other than Intel products for those processes.
All right, Laura, thank you. Appreciate it. Our very own Dan Howley is on the ground in Las Vegas at CES, the biggest tech event of the year. He sat down with Qualcomm's CFO to discuss the company's big announcements at that conference.
We're here at CES 2026 with Qualcomm CFO Akash Paliwalka. How are you doing?
Good.
What is the big takeaway for you from CES right now?
We're incredibly excited. I mean, this has been one of the most interesting CESs for us, and we're very excited about the announcement we've done on robotics. We've been the leader in physical AI within automotive for ADAS, autonomous driving, for a significant period of time. And we're solving multiple problems. We've built a chip that is high performance, low power, does AI. We have a stack that sits on top of it that manages the hardware. And now we're taking that advantage, that leadership that we've built over, and we're moving it to robotics. Because a lot of the problem statement, physical AI problem statement, is similar when you go from cars to robotics to humanoids. And what these humanoids need to do is be able to see, be able to perceive, be able to reason, make a decision, and take an action. And those are all things that require chips like Qualcomm makes, and it's high performance, low power, and be able to do it on the edge without going to the cloud, and be able to consistently do it with safety for a long period of time. And so very excited about it.
Well, we got this big guy right here.
Yes.
What can you tell me about this? This is running Qualcomm's Dragon Wing chip. Well, here we go. He's grabbing the fruit. What is going on here? What is the chip? What is Qualcomm powering back here?
So this is the new platform that we announced, IQ10. If you think about the robotics problem statement, there are two things you need to solve. There is a locomotion, a motion problem statement, and then there is the brain, the AI problem statement. The platform we've built does both. It's one chip that is able to really control the motion of the device, but then also allow the device to think. There is a tremendous amount of AI capability on the device. And so this robot is looking, it's making a decision based on the color of the plates, the color of the fruit, and then driving the locomotion to pick up the fruit and put it in the right colored plate. It's a simple use case, but what this does is it shows that it is using the brain of the robots and it's using the movement of the robots and bringing the two together to make an action that then can be replicated in several other things that the robot can do.
For something like this, there's robots kind of galore here at CES. Thankfully, they're not going to overthrow us yet. But at what point do we start to see these kind of hitting the real world, kind of entering mass production in industrial settings, things like that?
Yeah, I think what we've seen so far in robotics is largely purpose-built robots and purpose action robots. They do specific set of things. I think the next step is you can build something that has a brain now, takes advantage of all the AI progress that we've made over the last several years. You combine it with the motion, and now you can build a special purpose robot that does special things. Like as an example, you can have something that is in an industry, that's in a warehouse, that's in a manufacturing line, even in a home, that does very specific set of actions. The nirvana then is to have a general purpose humanoid that does all kinds of actions, that can think and perceive and see like a human being. I think we're a little away from that, but the next big step is to build special purpose humanoids that can do a lot of actions that we can do, and they're consistent, high efficiency, and they can do it for a very long period of time without getting tired, without needing a break, without needing a battery charge if you use a Qualcomm chip in it.
I want something that can fold my laundry and take the dishes out of the dishwasher, but outside of just robots, you guys also have an announcement that you're working with Hyundai. What can you tell us about that?
Our automotive business has been one of the strong stories of Qualcomm. We've been able to leverage our core technology created for handsets and then apply it to what we call the digital chassis for the automotive. So we build connectivity chips, help the car connect to the cloud. We build the cockpit chips, which is the inside of the car and drive magic into it. And then we build the autonomous driving chips. And all these chips, we're seeing tremendous traction across OEMs globally, independent of the geography of the OEM. And the Hyundai announcement is another step in that direction. I think they've been a very good, very strong partner for a long period of time, and this announcement is an extension of our relationship.
This is just part of the broader strategy, right? For Qualcomm, for years it's been Qualcomm's the smartphone company, right? You have chips in Samsung devices, you have your radio chips, you have the licensing business as well. Now you're in PCs, you're in robots. There's can't see it on camera, but there's a digital bird feeder. Which is pretty cool if you like birds. Where do you see this kind of going? When do you see the other businesses overtaking the smartphone side?
I think we've laid out financial targets very clearly. I think we are going to see our automotive and IoT business grow from 8 billion to 22 billion revenue over the next 3 years. And so very excited about the trajectory we are on. But that did not have any assumption on humanoids and robotics. It did not have any assumptions on data center. And what we're really seeing is as the world is changing, our technology is becoming relevant to the most important transformations that are happening in the world. If I think about the most important transformations that are happening, it's physical AI, which is ADAS and robotics, it's data center, it's personal AI devices, whether it's glasses or some kind of wearable device that can see what you can see, that can hear what you can hear. And all of those technologies, Qualcomm is at the center of the transformation, and so we're very excited.
All right, Akash, thank you so much for joining us.
We're wrapping up today's Market Domination. Don't go anywhere. We've got you covered with all the action. Following the closing bell, stay tuned for Market Domination Overtime.